Now in part part 3 of the 6th homework set, we're going to actually do a bank reconciliation. So it's a fresh example here. In other words, it differs from whatever you saw in my handouts or the videos associated to those. We got elements amalgamated, maker of heating elements for stoves and ovens, receives a bank statement reporting a cash balance of. So this is what the bank believes the cash balance of is as of the cutoff of December 31st. Now their ending cash balance in December is this much. Now you don't expect those two to be equal. That would be weird if they were equivalent. Not impossible, but strange. I'm just going to get rid of those lines because they're kind of covering up the numbers. So what we're going to do is figure out what the actual balance is. It's somewhere between those two numbers. We don't know exactly where, but neither one of them is totally true as far as what the actual balance is, because they're missing information. So we're going to go over 7 items that were discovered in the process of compiling information for the bank reconciliation. So element number 1 here, or I. So last month's bank reconciliation, that's where we always start. You start with the previous bank rec, and you look at outstanding checks on that one. Now, we note that 5 of those checks that appeared on that previous bank rec for November also appear on the bank statement. But we note this one check does not appear on the bank statement. So what's the fact is of that check? It's still an outstanding check. That's why we're going to subtract that. There's the notation from the bank balance. In other words, we've already subtracted it in some previous period, still has not cleared the bank. So we're going to continue to consider that an outstanding check until what happens? Either it clears or it goes stale. And now, given the amount here, what would happen if it went stale? We'd reverse the original entry, whatever that was. Let's say it was for a payable. So the original entry was accounts payable, debit, cash, credit. So we would just reverse those 2 elements there, reinstate the AP, pretend the cash is back in the bank, and then do a reissue. We assume somebody wants this money because it's a large enough amount. Definitely beyond the scope of materiality in this case, or what we consider material, I should say. Double I is 2 deposits made near the end of December for $1,100 and $26.50. Didn't appear on the statement. So this is an example of 2 deposits in transit. So we're going to add those both to the bank reconciliation for whatever the bank balance is. Now for these 2, it's okay to probably add them together and make it one line for deposits in transit. Those will take care of themselves. Those are usually not a big deal. You usually, it would be very weird if you had a deposit in transit that was still a carryover from the previous period. That's why we usually don't even talk about it, because it's not going to happen. So it's okay to lump those together and not separate them. You do need to, in reality, keep your checks separate for the reasons I just stated in the previous part. In other words, when you do the January reconciliation, you can look at all the outstanding checks for December and see have they cleared the bank in January. If not, they continue to be outstanding until they either clear or go stale. All right, our triple lowercase I here is a credit memorandum for interest earned of $930. All right, so the bank's added this to your balance. It has not, however, been added to your ledger balance, so we're going to add it to the ledger balance to bring them up to snuff, to bring us, I should say, up to snuff. All right, IV here is going to be 3 checks drawn in December. Check 600, 605, and 620 for those amounts. Didn't appear in the statement, so those are all classic examples of what? Outstanding checks. So those 3 checks will be listed as outstanding in addition to the one that we indicated up there. So right now there's 4 outstanding checks that should appear in the bank reconciliation as it pertains to the bank balance. Right, V was a debit memorandum for an NSF check from Fulgen Industries, a customer, in the amount of $2,000 plus NSF charge of $50. Now again, this is an amount that's already been subtracted from the account by the bank. We have not accounted for it, so that's why the adjustment is to subtract it from our ledger balance. So VI here is going to be another credit memo for collecting a note with a face value of $9,000 plus interest of $250. This is another amount, again, that we have not accounted for, but the bank has, so that's why it's going to be added to the ledger balance. Now, just so you know, customarily what would have happened is these 6 elements would have been the things that we figured into the original pass on the bank reconciliation. But guess what happened? When we did the initial try at it, it didn't balance out. So then we had to go through error detection procedures and then figure out that there was something missing. In other words, there was some element, there was an error made somewhere. So usually the errors are going to be made where? On our end, the company's end, usually in the area of checks. It's usually customary to just do pass on all the deposits. Again, here's the deposit slip. Here's what we said the deposit's for. Here's what the bank said the deposit's for. That's usually a very quick process. Then the next part is when that usually checks down, then it's going to be, okay, here are the canceled checks. Here's what the canceled check says. Here's what the bank says. Here's what we say. So in the process of doing that, that part of the reconciliation, looking for errors, we discovered this one, VII, 7 technically. We discovered that this check 615 was drawn for $1,855, but for some strange reason, it ended up in the ledger as a nice round $1,000. Okay, so, and this relates to a payment for a new piece of equipment. So what you're looking at here is how to get rid of the error. Subtract 855 from the ledger balance. And again, how do you figure that out? Again, here's the rule. You take the errant amount, which is 1,000. I'm drawing the whole thing out because the other one's all, minus the correct amount of the check. Remember, the check is reality. The check is the verifiable thing here. So minus 1855 equals, and again, in brackets because it's just saying this is a negative amount, means we have to subtract 855 from the ledger balance in order to correct that error. So that was significant enough of an amount. Remember, 855 out of either one of these balances doesn't appear very material. But remember, materiality is a different creature when we're talking about cash. We still look at that and think, well, maybe somebody's trying to steal from us and they found a hole in our internal control system. Excuse me. So we want to look for it. It doesn't matter that with the magnitude of that difference versus the amounts in question isn't significant. It's significant enough in raw dollars to look for. All right, so we have all the information at our disposal here to do the bank rec. So if we're doing the bank half first, that's going to only include 3 of these elements total. It's going to be I, your double I there, so technically 2 if we're looking at Roman numerals, and then Roman numeral 4, lowercase of course, and then so those are the 3 you'll incorporate there, and that's it. That's what you'll see here. So here's the unadjusted balance per the bank statement as given. There's our deposits in transit. I just added them together, 3750, and then here are the 4 outstanding checks listed separately so that you can use them in the next bank reconciliation. So you'll go back in January, you'll look at this one and see, has check 568, 600, 605, and 620 cleared? Yes or no. If they've all cleared, then none of them are outstanding. You don't have to worry about them. Any of those that are still outstanding, they haven't cleared the account in January, would be part of the next bank rec. So subtract all those amounts there that we just listed. So it's going to be plus this minus all these equals, so we'll get 558,237 as our adjusted balance per the bank statement. Okay, so now we're going to go and so the other elements, the rest of them are going to be adjustments to the ledger. So we have the credit memo from 3, 5 and a debit memo, and another credit memo from the collection of the note. And then of course we had the error related to what we were doing. So those 4 elements will be incorporated in the bank rec here. So we have the unadjusted ledger balance as given, 550,962. Add the interest earned and the note collected. That's okay to lump that together there. You don't have to do that as separate lines. But of course this is separate because it was a separate idea, because it was interest earned on the account that the bank gave us credit for. All right, so we're going to subtract the note, the NSF check. I'll get it right one of these days. And of course the error on check 615. Again, so in other words, when we initially did this bank rec, this balance here was $855 higher than this one, thus alerting us that there was some mistake somewhere. So we found out what it was. It was just some strange rounding error that happened. Let's subtract that 855, and then we will get the same balance for the ledger as we do for the bank statement. So they equal each other. Now, what if there was still a small discrepancy, with like $50 or something like that? What's the rule? You should usually abide that, because again, it's not material enough to worry about one way or the other. We're really talking about a small amount. Plug to whatever the bank says. So if the bank balance is higher than your balance, then you would simply add that as some sort of other revenue. So just debit cash and credit some like other revenue. If the bank balance is smaller than your balance, then you would do the opposite. Then you would just credit cash and then debit miscellaneous expense for the $50. That's how you just then now everything equals. In other words, don't worry about it. It's not worth looking for. Again, cost benefit is going to tell us that's a bad trade-off. Right now from this, I would ask, tell me what you would use as the source for any journal entries. Right, so what's the rule? Whatever we did here will take care of itself, so we don't care about that. Like, those checks will eventually clear the bank account, and the deposits will eventually be incorporated as well. So that stuff's going to take care of itself. Everything down here we have to book. In other words, this is the balance we have sitting in cash now. We want it to be, you know, this balance here. So the only way to get that to happen is to book all of those amounts that we see here as transactions. So that's what you're going to see on the final slide of this part of the homework. So cash or cash in bank, debit, interest, revenue, credit for the 930. Again, that's taking care of the interest earned here. Next up is to take care of that note collected. Right, so for that one, we're going to add 925, pardon me, 9,250. Again, I'll get it right eventually. Enough repetitions of this, and eventually everything will be copacetic, but you never know, maybe not. So we can add that, and we want to retire the note receivable from the books. Again, we assume, because it was in the bank's possession, that whenever they were paid, like took payment on our behalf, they surrendered the note to the maker of the note, who of course destroyed it. So we want to credit that off the books because it doesn't exist anymore, and then record additional interest revenue in the amount of $250. Of course, next we have to subtract that NSF check from Fulgent Company. So how's that going to look? We're going to reinstate Fulgent Company's balance for the full balance, right? They owe us now $2,050, not just $2,000. So debit that and then credit cash and bank for the $2,050. And then lastly, if you remember the error here, what was the notation? Related to payment for a new piece of equipment, so that'll give you some clues to how to handle it when you're doing the entry here. So in other words, we should add $855 to the equipment balance, debit that, and then now credit cash for the same. So after we book these 4 transactions here, our balance will now be this, which equals the reconciled balance. That's why you should always look at a bank reconciliation as a source document for your adjusting entries at the end of the period. All right, and that concludes part 3 of this homework set, which I think is probably going to be expanded upon, so look for other videos regarding the subject matter. See you then.